Hi and welcome to another video. I'm very happy to say that the joint combine, which has been the topic of quite a bit of discussion in the last video, has come to a successful end. So as you see here, we've reached the target, $31,505.60. Yesterday we were at 31,365 and some change. We made up the difference and we've ended the week and this combine on a good note. So let's look at the stats. So here are the stats for this nicknamed Patient Pigeon. That's her moniker in Topstep Trader for now, and her meaning my partner. And these are the stats. So you can see the average win, the average loss, risk to reward, win rate, number of trades, 43 trades. Just one shy of being 50%, so 49% basically. And that's that. The drawdown, max drawdown in the entire combine, we'll have a look in a second at the equity curve, but max drawdown minus $486.80. Max updraw, and just in case you don't know what updraw is, this is a new function I've put in the spreadsheet within the last several weeks or couple months. Winning streak, I've called it. Updraw is what they call it over at Edwards-Marche, the guys who have created that journal. And basically this is the longest winning streak without being interrupted by losing trades. So how much money did we make in one go without losing a trade? And so this is indicative of how you might expect runs to go. When we go over to the next equity charts sheet, you'll be able to see this in action, how it's calculated. So our drawdown nearly $500, so less than a third of what we accomplished, and the updraw about half of what we accomplished in terms of consecutive wins. Strangely enough, and I've seen this occur all over the place in my trading, the short trades have outperformed drastically the long trades. Essentially broke even and all the money was made on shorts, even though we took a pretty even split of trades between the two. But I don't really look at that. This is just for fun, really. I just trade. So yeah, you got the number of days, 13 winning days and 6 losing days. I'll bring over this over here. This is what it looks like. This is yesterday. It hasn't added in today's yet. That will occur after the close of this business day on Friday. So it will say 18 there. You might be wondering why it doesn't say 19. That's because Rhythmic counts. If there's a holiday on a Monday, Rhythmic counts the Monday and the Tuesday as one trading day. So that's the reason for that. Best day, worst day, headline stats, average winning day, a little less than the average losing day, but the frequency will probably be about 75% or thereabouts. So that's that. Well, actually, we can see here the winning days is, I don't know why that's saying 68, because one of them was a loss, and so it counts the losing days twice for that Monday and Tuesday, a holiday in the States. In any case, 70% winning day rate, and the average winning day here shows up as more than the average losing day. So that's got to do with the calculation, but let's not beat a dead horse with that. Equity curve, this is where you can see what's going on. You have the win streak column here, so you know, if you have, this is the P&L by trade, this is the cumulative running P&L. So if we look to this column B, you can see that here we made 2 trades here, and that's the sum of those 2, and then we lost, so we go back down. Here we did the same here. So if we scroll down at some stage, yeah, this is our largest updraw or winning streak, which has been the last 1, 2, 3, 4, 5, 6 winning trades in a row. Likewise, the drawdown calculates You can check out the video if you look for Q&A how to calculate max drawdown. There's a whole video on that, so I won't go into that. But these numbers here are what show the max drawdown. So the largest drawdown was near the beginning at this period here. Yeah, where we lost this, and this. That's the max drawdown, I believe. Oh no, here was the max drawdown. And so the equity curve, you can see here, 152, we go up, we go down, dip below zero by 170, up to like 500, back down to zero, and then we took off from there with a sizable win here, and then after that, just pretty much grinding with smaller wins. We had one outlier here and another outlier here, 500 and 600. The equity curve, here it is. As we've been on a winning streak into the close of this combine, that's why the curve's nice and smooth at the end here, but you can see as representative of the stats I just gave you, the max drawdown's about 500, and then after that it was smaller, and we got into a groove, and we've smoothened out those losing periods and managing our contracts differently, because we've been trading up to 3 contracts. If I go over to raw data, you'll see here, 2, 2, 3, 3, 1, 1, 3, 2s. We've been managing risk in different ways according to the method, sometimes 1, sometimes 2. Starting from here, this is the beginning, so 1s and 2s and 1s. Then we went 3s, 1s, 3s, and so on, all the way to the end. And this week, 1. We made $670-ish, $666 and some change this week using 1 loss. So the question of whether this is more efficient for me, partnering up with my partner, my girlfriend, is kind of a null point to me. I know the sample size, as someone pointed out, isn't that large, but it's working for me. But we'll touch on that point in a second. So let me post the video and just make sure I haven't left anything out. Yeah, what I wanted to cover as well was I wanted to look at the prior combine. So this is the 3rd combine I've passed. Remember we've got an FTP, our FTP, however you want to look at it. I'm just blending the two now. So when I refer to, for the sake of this video, I'll call my FTP FTP1 from Combine 1 this year. And then this is Combine 2 that we've done together. So we've still got Combine 1's FTP open and more than halfway to the profit target, and which means more than halfway to being funded on FTP1. And now we've got Combine 1 in the bag, Combine 2, excuse me, in the bag, which is a joint effort. And we will be moving on next week to FTP2. Now what we probably will do, and what I've been discussing with my partner, is we will just go ahead and take over my FTP that I've been languishing in and sort of making slow, my typical slow but steady progress, and just jump on there together and see if we can take that home. And then we'll go on to the other FTP, because there are no time limits. So it makes sense for us to get one FTP, whichever FTP is further ahead. So that's number 1. We'll get that sorted, and then we'll do FTP2, which is the one that will come from the combine we've just passed. So this was last year's combine, the first one I passed in 2016. That took, one thing I just wanted to point out, that took 57 days, trading days, and 260 trades. Then we flick over to this. This took 47 trading days, and let's see if we can see how many, and 129 trades. So the first one in 2016, 260 trades, 57 trading days. The second one, 49, I think we said, 47. Yeah, so 10 fewer trading days to pass, and about half the number of trades, because we're about 250 or whatever that number was before. There's the equity, there's the things, which I didn't show that, but that's not necessary on this combine. You got all the main stats. And now this one we've passed in 19 trading days. So we've cut it right down from that 47 to 19. bigger average winning trade, obviously bigger average losing trade, but the risk to reward is healthy, win rate is healthy, and everything's just accelerated, quite frankly. Doing everything quicker. That number I mentioned last time still seems to hold true, that we are about 2.7 times as effective as I've been on my own as a team. So that's that, and here we have successful combine, the stats. This was earlier this year, the video I put out on the first combine, combine number 1 of 2017, and yeah, so I encourage you to check out that video there, successful combine, the stats, to make a comparison. But we're just head and shoulders above the rest. 2 heads are better than 1, and there's nothing else I can say about that really. So the doubts, people's doubts with regards to you know, whether this is working or whether it's necessary. I know I got one comment from Dick Mason, if that's how you pronounce your surname, Dick, about why not just click the button. Believe me, I've asked myself this over and over again, and this is what caused me to resist. And I know some of you, some traders who are caught in their own ego, are going to think that, well, I should just fix it. But fix my problems, my trading woes, and be a one-man band. But do you want to make money, or do you want to be right? Do you want to be righteous, or do you want to have success? I don't mind being humble. I did mind for the longest time. It is a tiny little bit of me that says, well, why can't you just do it on your own? And during this last month or so, doing this with my partner, I've had moments where I've got angry and I thought, well, for fuck's sake, you know, excuse my French, why can't you just push the button? It just doesn't work. It doesn't work for the reasons that I mentioned in the last video. That's where I'm at now. I may refine that point of view. It's not set in stone, but I'm noticing that the analyst and the trader need to be in perfect harmony, and there's a conflict of interest, as I mentioned in the other videos. So I'm not going to rehash what I said there. I stick by that. If you want someone who's further ahead than me and has got more status in the community, you can head over to My Trader State of Mind. Randy Howell is the person I think I mentioned in the video last time. He talks about, they do, you know, you can look yourself anyway, but you've got the analytical mind and you've got the trader's mind, and it's very difficult to combine the two. That's why traders need trading psychologists, because they're trying to do the breakthrough. What is the breakthrough? The mental obstacle is crossing over from the trader to the analyst back to the trader. We all know when we sit down and we look at sim and there's no money on the line and we're free to analyze without being penalized, the money is like the market slapping you on the face when you're wrong and telling you, if you let the ego get in the way, which we all do, and the successful traders that do it on their own manage to do well enough to break that down. But it will always be a problem. You will always feel some element of feeling wrong. Or I shouldn't say always. The vast majority of us will continue to struggle with that, and the select few will get over it. So there's an easier way. Like, if the analytical you is suffering because you are going putting your money on the line, separate the two out. And as I said, Dick said, well, you still know how you're doing, you still know if you're winning or losing, but it's just a division of responsibility. I'm free to analyze without thinking about hurting myself in the market. And I know I'm using these words, I know they aren't, you shouldn't think of a losing trade as hurting yourself, but deep down there's some work left to do. Someone said my psychological flaws as a trader. I think that's a bit of a big, mighty way of saying it, a bit nasty as well, because I wonder how well you're doing. But I digress anyway. I'm not going to fight myself if there's an easier way to do it. I will continue to work on myself and continue to, we will experiment, and maybe I'll try and manage one of the funded accounts on my own and give myself a certain drawdown. Maybe we'll do a third, get a third account. I'll practice, or I'm just going to grow into what I can and can't do. So I don't want to belabor the point too much. You can watch the last video to get my point of view on that, but that's where we're at. We've blasted this combine out of the water. Very few hours spent trading it, much fewer trades, like 40 odd trades as opposed to 120 or 260. So it would appear that we've got an advantage by working together in this way, and we're going to continue in that vein and do that. So I encourage you to follow my journey. I've backed up right off of the videos for the reasons I mentioned a few videos back in Crash and Burn. I think it was that video entitled Crash and Burn. But I am excited, and I would like to share with the people who are supportive of me or curious about where this is going. I would like to share my journey, and hopefully I'll be able to prove that with enough insistence and persistence, and if you work on yourself, you can eventually achieve success in trading. Our goal is to actually live off of the funds, and so we'll see how that goes. The loose plan at the moment is to use one account to build and one account for income, and at this rate we would do extremely well. So I'm not expecting this to continue. We'll see how it goes. I'm not claiming that we're the best or I'm the best trader or all this kind of stuff. I'm just simply sharing my journey. So with that said, I'll end this video now. It's long enough, and I will catch you all in the next video. Take care and bye for now.
Won't you rub your fingers